Okay, now this is the from the revision session. This is the second day discussion on the revision part of the we have stopped from the non-resident taxation and international taxation. The same part, that was a part revision discussion. It's a part 1 of the non-resident taxation discussion. This is the part 2 of the non-resident and international taxation discussion. The same manner, which taking into the consideration of the revision kit of your SL3, and finally I thought it's good to take the past paper discussion, as I have promised the December 2019 non-resident taxation question we will discuss. Okay. Then in last session, this is actually combination of the last session and this session, because question 1 and question 2 we have done based on the revision kit in the part 1 discussion, then part 2 discussion in the same in the revision kit question 3 and the December 2019 past paper question. Okay. Then I am starting the revision kit question 3, which is in the question 1 and question 1 more or less for the writing part of it, to understand the residential status and the permanent establishment, all these things, and the question 2 goes to the individual taxation part with compared to the double taxation treaty, and question 3 is more or less, it's a company type of the question. We will see what's the question, and I will explain each scenario, and we will go to the answer of the revision kit, and we will discuss the answer. Okay. Then come to the requirement. It's a very small question, only 4 adjustments. Then here, what's the requirement? Determine the correctness of the deductions under each above item. Little different aspect of the question, and it is asking like if you have done Lamaya, even it is not in 2020 curriculum but in 2015 curriculum, which is a first paper was tested with the Inland Revenue Act number 24 of 2017, which is December 2018 paper. In that, the same kind of a question has tested. The particular expenses given, such expenses can be deducted when arriving into the business income of that particular non-resident person. The same kind of the approach is here. It's asking determine the correctness of deductions under each above items, whether these can be deducted or not, given that the manner of determining business profit. When you are arriving into the business profit, such Roman 1 to Roman 4 items can you deductible under what? Under double taxation treaty between Sri Lanka and India is in line with the UN model. That means the Sri Lanka and India double taxation treaty has the design aligned according to the UN model. Therefore, it asking based on the double taxation treaty in Sri Lanka and India, these expenses can be deducted or not. That's the question. Okay. Then we will come to one by one of each these scenarios. Okay. Here, what's the first one? First one is the background information. Minex India Limited, a company incorporated in India. Let me analyze the question while I am reading. Okay, it's a Minex India Limited. What is the name of the company? It's Minex. This is question 3 of the revision kit under non-resident and international taxation. Here, it's a Minex India. In the question, it has given what? Incorporated in India. Incorporated in India. Now, Lamai, when looking at this, since this is incorporated in India, then what you should know from that? Therefore, this Minex India is what on behalf of the Sri Lankan taxation? It is the non-resident person. Non-resident person. Done. Then has set up a branch in Sri Lanka. Now what is the relationship with this non-resident person and the Sri Lanka? Now this, on behalf of this non-resident person, there is a fixed base of business which is a branch office established in Sri Lanka. Branch office established in Sri Lanka under the name of the Minex India Sri Lankan branch office. Then for the manufacture of rubber-based products, in computing the income of the branch in Sri Lanka for the year of assessment 18-19, we will take it to the 2021, having considered the DTA between Sri Lanka and India. Now, in the question, examiner very clearly mentioned you should apply the, what's the requirement? Examiner requirement is the requirement, this is a compulsory thing you should look at. It very clearly telling the DTA between Sri Lanka and India you should apply. Then under this kind of a situation, Lamai, don't go and apply the provisions of the Inland Revenue Act, because the examiner's special requirement is apply the DTA between Sri Lanka and India. Okay. Then accordingly, the company has made the under mentioned deductions as well. Now first thing, now I am again a little bit doing a repression thing. This is a branch office with reference to a non-resident person. Therefore, if there is a branch office situated in Sri Lanka with reference to non-resident person, what is this, Lamai? As per Sri Lanka India Treaty, the Article 5, this is what? This is a PE. PE mean what? It's a permanent establishment. In this, if there is a permanent establishment with reference to non-resident person, what should you calculate it, Lamai? Business profit. Business profit. According to what article in the DTA between Sri Lanka and India? According to the Article 7. According to the Article 7, you have to compute the business profit. Now it's asking, okay, there is a business profit, but following expenses were the deducted, then what is the treatment? Come to the first one, Lamai. It's the first one is asking, rupees 1 million paid to the head office of the company in India as the reimbursement of interest paid on a bank loan obtained by head office for purchasing a plant which is used by the Sri Lanka branch. Okay. Then what is the first thing it is asking? It is asking about the interest, the finance cost which they paid to the head office. Okay. Then what's the purpose of this? Analyze this. 1 million paid to the head office of the company in India. Now, why in Sri Lankan branch this has paid? India has reimbursement of the interest. What's the meaning of reimbursement? My expenditure. What is my expenditure? Branch office, which the expenditure that branch office should incur. It has incurred by the head office. Branch office එක විසින් දරන්න ඕනේ වියදමක් head office එක විසින් incur කළා. Now this is not that branch office has incurred the expenditure of the head office. These are key points, Lama. When reading the questions, you all taking these things as the irrelevant factors and you all thinking, this is head office expense, that should be disallowed. It may be disallowed, may not be disallowed, but Lama, you should have to analyze this. It very clearly given rupees 1 million paid to head office of the company in India as reimbursement of the interest paid on the bank loan obtained by head office. What is the purpose? For purchasing a plant which is used by the Sri Lankan branch. It's very clear. What's the purpose of the interest? I will take the first transaction, the payment of the interest. Payment of interest. Then this is not the payment of interest of the head office. This is the payment of interest. This is a reimbursement. Reimbursement, that means the expenditure which I should incur, it has incurred by the head office. Then reimbursement of interest for what? What's the purpose of the loan, Lamai? The purpose of the loan is to, what it has given, to purchase a plant. Purchase a plant, and plant used for production of income of Sri Lankan branch. Sri Lankan branch. Then for my branch, the plant is using in my branch, maybe in my financial capacity or anything, due to some restrictions, they have not given the loan to me. Therefore, on behalf of me, the head office has taken the loan. Then it is my finance cost, then it is the plant is using by me, that finance cost has paid by the head office. Then what I have done, I have reimbursed that. It should be in my books, it is my finance cost under the loan interest. Is it deductible or not deductible? It is deductible expenditure when arriving into the business income. Okay, then we will come to the answer. This is the answer for question 3, part 1. We will come to the first 2 paras first. Question 3, Minex Private Limited, instead of 1819 Lamai, we will take the year of assessment 2021. The branch of Minex India in Sri Lanka is under the provisions of DTA a permanent establishment. I think it's clear, I have explained it. Permanent establishment of that non-resident company, which is Minex India. This is the PE. I think it's clear. Therefore, the profit of the PE should be computed taking into account of any relief provided in the DTA between the 2 countries. For tax purposes, the profit of the PE is taxed always as a non-resident person. It's a business profit we have to compute. Then it's as explained in the second paragraph. As stipulated under Article 7 of the DTA between Sri Lanka and India, only the profit attributable to the PE, only the profit arising in or derived from PE liable to income tax in Sri Lanka. The paragraph 3 of Article 7 thereof quoted below provides for the manner that basis of ascertainment of the profit of the PE, ascertainment of the profit of the PE. Now we will come to the first one. Accordingly, interest paid as reimbursement rupees 1 million, C being actual expenses paid to the bank. Who has paid the actual expenditure to the bank? My head office. Then is allowable. It is allowable deduction. True, generally any interest paid to the head office is not allowed. This is allowable. But we have done the question, you all know any interest paid to the head office is not allowed. But there is no adjustment due regarding on this amount. What it has mentioned, this is allowable deduction. While am I allowable deduction? This is actual expenditure which I should incur. It has incurred by the head office. Now assume like this, Lamai, the finance cost relevant to head office I have paid. Now it cannot be allowed. Here my expenditure paid by the head office, all the nitty-gritties, all the usefulness is using in Sri Lanka by me. Clear? Okay. Then I need to take you all through to the DTA between Sri Lanka and India. Come to this. Here I need to go for the Article 7. in the DTA between Sri Lanka and India. Here, please look at the paragraph 3. This is very critical. In your examination, in non-resident and international taxation question, if the treaty is testing, the particular article is given as the annexures. Therefore, in that annexure, since it is given to you in the paper, please read it. Carefully, please read it. Don't be panic. Then, හිතේ තියන් ඉන්න දේවල් එතන apply කරන්න එපා. Don't take this as the head office expense. A lot of students doing these things. Then you are losing your marks. If the particular annexure has given, now we have done Singapore-Sri Lanka treaty. When doing the pilot paper, I have taken the China-Sri Lanka treaty, and now it is India-Sri Lanka treaty. Therefore, when it asking a question on that, carefully read the given annexure. It's very important, the given article as the annexure. Now come to the paragraph 3 of the business profit article. In determining the profit of a permanent establishment, there shall be allowed as deductions expenses which are incurred for the purpose of the permanent establishment, including executive and general administrative expenses. So, incurred, it should be actually incurred, whether in the state in which the permanent establishment is situated or elsewhere. Even it's my expenditure, even it has expended by the head office or a branch office, it doesn't matter. But that particular expenditure should be relevant to me and it should be incurred during the year. Then, in accordance with the provisions of and subject to the limitations of the tax laws in that state. Then it should be done according to the laws in Sri Lanka. Now see this proviso. However, no such deduction shall be allowed. No such deduction shall be allowed in respect of amounts, if any, paid otherwise than towards the reimbursement of actual expenses. Lamai, see the word. In the double taxation treaty, this article itself, it has given this. It has given otherwise than the towards reimbursement of actual expenditure. Meka mokadda, this is the reimbursement of the actual expenditure. Therefore, can claim or cannot, or can deduct or cannot deduct, it can be deductible. Otherwise than towards reimbursement of actual expenses by the permanent establishment to the head office of the enterprise or any of its other officers by way of royalty, fees or other similar payments in return for the use of patent, know-how or other rights, that means it's royalty, or by way of the commission or other charges for specific services performed or for management, or it's except in the case of the banking enterprise by way of interest on monies lent to the permanent establishment. If it is a banking bank, if I have taken loan from the bank, then my bank is it's under the normal business activity, the bank has given loan to us. That's why that part also eliminated under this disallowable expense part. Then by way of interest on money lent to the permanent establishment. Likewise, no account shall be taken in the determination of the profit of the permanent establishment for amount charged otherwise than towards reimbursement of actual expenses. It's very clearly given, Lamai. Reimbursement of actual expenditure can deductible by the permanent establishment to the head office of the enterprise or any of its other office by way of royalty, fees or other similar payments in return for the patent, know-how or other rights, or by way of commission or other charges for specific services performed or for management or except in the case of the banking enterprise by way of interest on money lent to the head office of the enterprise or any of its other officers. See, it's a the business profit article, article 7, paragraph 3, it's very clearly mentioned, if it is actual expenditure which relevant to the PE, we can deduct it. Under that ground, the first adjustment we can taken it as the allowable deduction, but it's very clearly given generally any interest paid to the head office not allowed. Any interest paid to the head office from the branch office, it is not allowed. If it is recorded in the expenditure under branch office, it cannot be allowed. It's very clearly given in the double taxation, the treaty with the reason. But here, Lamai, what? It's given other than the reimbursement of the actual expenditure. This is the reimbursement of the actual expenditure. Therefore, it should be what? It should be deductible. I think it's clear. Okay. Now we will come to the Roman 2 part of the question. Rupees 2 million being R&D expenses incurred by head office. Now this is the second scenario. Second, I will take the same space and we will analyze the transaction first. Here, rupees 2 million being R&D expenditure incurred by head office. Now, head office incurred R&D expenses. This is a transaction. R&D expenses. Here, no restriction on the deduction of such research and development expenditure. It is yeah. We will go to the question and discuss. Here, I think I am in the correct place. Yeah. Here, 2 million being R&D expenses incurred by head office. The no restriction on the deduction of such research and development expenses. Let me come to the, it's again in the answers. Then we will come to the question 3 here. Sorry for that. The rupees 2 million research and development expenses incurred by head office for the improvement of the product manufactured by the branch. Now what's the reason? Improve the product which manufactured by the branch. What is this expenditure now? Product is manufacturing by the branch. Product is manufacturing by the branch. To product which manufactured by the branch, then to improve its production capacity, improve the qualities of the product, who shall incur the expenditure? It should be incurred by the head office or a branch. It should be incurred by the branch, Lamai. Again the same scenario, the expenditure, R&D expenditure which should be incurred by the branch, it has incurred by the head office. Branch එක විසින් දැරිය යුතු වියදම head office එක දාලා. What is this? This is actual expenditure. Actual expenditure which relevant to the branch. This is not the branch has incurred the expenditure of the head office. This is again which is a expenditure relevant to branch, it has incurred by the head office. This is an allowable deduction. Okay. Then Lamaya, you may have a question that under section 15 R&D, then can we take this? But Lamaya, here in the section 15, see the requirements. It has given it should be incurred by the person. Now here it has not incurred by the branch office, it is incurred by the head office. Therefore, since this is the expense which relevant to the branch office, we can deduct it under business income. Now if it has deducted now, no adjustments required, but that double deduction requirements we cannot go. Come to the answer. Then here Roman 2, rupees 2 million being R&D expenses incurred by head office. No restriction on the deduction of such research and development expenses even incurred by head office C, as such amount is relation to what? To the Sri Lankan branch. If the expenditure is relevant to the production of income of the Sri Lankan branch, the amount is allowable and no adjustments due. I think it's clear. Then we will again come to the question. In the question, the Roman 3, rupees 2.5 million fees paid to the branch of the company in Singapore. Now it's little bit a different situation. Now branch office in Sri Lanka, branch office in Sri Lanka paid it's given a 2.5 million management service fee. Management service fee 2.5 million paid to whom? Paid to the branch paid to the branch of the company in Singapore. Another branch office in Singapore. Branch office in Singapore, this has paid. Branch office in Singapore for providing special management services to Sri Lankan branch. For this branch office, they have provided management services to Sri Lankan branch. Then Lama, is it incurred for the production of income of this branch? Is it incurred for the production of income in our normal the testing way? Yes, it has incurred for the production of income, but Lamai, what is this? It is a management service fee. From one branch to another branch, it is the management service fee. Then this is special management service fee. This cannot be deductible. This cannot be deductible. We will come to the answer in the Roman 3 discussion of the answer here. Special management fee paid to Singapore branch amounting to rupees 2.5 million, but it is not allowable. It is not allowable. Why? Under the specific restriction in the UN policy on the deduction of management fee payable to head office or other office, that's mean any related party, this amount should be added back. Why? In the Article 7, Article 7 paragraph 3, it's very clearly given, even it has to the however, no such deduction shall be allowed in respect of amount, if any, other than towards reimbursement of actual expenditure to the permanent establishment shall be allowed in respect of amount, if any, paid, now that part, and by the permanent establishment to the head office of the enterprise or any of its other office, by way of royalty, fees or other similar payments, return of technical know-how and these things, and commission no other services performed or for management, for performing of the management services, even the head office or the branch office relating to that head office, can you deduct that management fee? No, it should be disallowable expenditure. It should be disallowable expenditure. In the double taxation treaty, it's very clearly provided. Now we will come for the next one. Here the question, the last one. Now the first one is deductible, second one deductible, third one it should be disallowed. We will look at what is the fourth one. Rupees 3 million payment made to the head office. We have made the payment to head office by way of royalty for the use of a software provided by the head office. Lama, in the Article 7 paragraph 3 very clearly given. For patent copyrights, anything, can you deduct the royalty? No, you cannot. That's why the fourth one also shall not be deducted as per the double taxation treaty between Sri Lanka and India, and it should be disallowed. Okay, come to the answer. Here, fourth one, royalty paid to the head office being 3 million rupees is not allowable deduction. This is reflect from the paragraph 3 of Article 7 quoted below from the DTA between Sri Lanka and India, where any royalty payable to head office or its related office fall within the non-deductible items. Non-deductible items, therefore, Lamai, this is the double taxation treaty, that particular article which I have taken from the India-Sri Lanka treaty. You can check it. Then therefore, this is royalty cannot be deductible. Okay. Then this is, even this is, you can seen as a little bit little bit small question, but see how many the points you can gather from this question. Okay. Now Lamai, taking into account all three questions in the double taxation treaty in India and Sri Lanka, and that first question also, it's with double taxation treaties, and the second question of the revision kit, it's more or less, it's a individual the taxation. It is in the Taiwan, in the Malaysian, the employee, if not mistaken, it's the individual person. Then here all three questions I have taken, which is one to one, it's different. Therefore, please take the essence of this question and practice again. And even these are small questions. The particular the concept testing is very highly applicable for your examination. Okay. Then this is the end of the discussion of the revision kit, all three questions. Then I am moving to the December corporate taxation paper, December 2019 corporate taxation paper. Okay. Let me analyze the question first. We will read the question and we will analyze the question. This is December 2019, December 2019 question 1, which I need to tell. This is under the 2015 curriculum question, from 2015 curriculum question, but this is in line with that number 24 of 2017, and since for your examination all these amendments are not testing, then the same concept is testing. Same concept is testing, therefore I have selected this question. Now we will come to the paper and we will look at what is this question. When reading the question, while reading I am analyzing the question. Okay, now what are the requirements we will look at? These are the requirements. A, I will go one by one. Required, analyze if PHP in Singapore is required to pay income tax in Sri Lanka. Now, up to now we don't know what is this PHP Singapore. Support your answer citing the statutory provisions of the Inland Revenue Act number 24 of 2017 and the Articles of Double Taxation Treaty between Sri Lanka and Singapore. You have to write the answer in this question, lamai, taking the consideration of the Inland Revenue Act provisions as well as the Double Taxation Treaty provisions which provided. Seems to be it's a Sri Lanka and the Singapore. It has given that part A for the 8 marks. Okay. Then part B, analyze if PHP in Singapore is required to pay income tax in Sri Lanka for the income it earns from the supply of delivery of equipment. Now the part A is asking PHP Singapore as a whole of PHP Singapore, did that entity or did that whatever the thing, is it liable for the income tax? In the second question asking lamai, they have, it seems to be they have a different the transaction, different project for that one, which is a delivery of equipment. It's very specifically asking supply and delivery of equipment, very specifically asking for that one. For that part, can they liable to pay income tax in Sri Lanka? Here, support your answer citing relevant articles of the DTA between Sri Lanka and Singapore and see relevant case laws. Now lamai, can you remember when it comes to the international taxation, we have only 2 case laws. One is the Chivias and Sons Limited versus CIR. It's for the dependent agent as well as for the independent agent, the Anglo-Persian Oil Company versus CIR. Now you have to look at what is the, now there is no 1000 knots case law for this. Therefore, lamai, only 2 case laws, you should need to determine whether which case law is relevant to this. How to determine? All answers given in your question. You should read the question carefully. And part C, compute the income tax payable by PHP on its income and gain in Sri Lanka, including the remittent tax payable for year of assessment 18-19. We will take it as for the 2021. Now see lamai, it's 2 requirement asking income tax liability in Sri Lanka, including what? Remittance tax. Now you cannot remember, you cannot forget, not you cannot remember, you cannot forget these fundamental things. If there is a PE, you are computing business profit. In that business profit, it's earned in Sri Lanka. When it's remitting to the head office, you should pay what? Remittance tax. Then it asking for the 5 marks income tax including remittance tax. And part D. Part D is asking, can you remember we have done in the last theory part contemporary issues in the taxation. In that, the ethical issues with the taxation, how the professional accountant is facing for the breaching of the ethical principles. Then you need to look at, can this person act on behalf of these things? What's the requirement for the 5 marks? Part D, advise Mr. Pereira on whether he will be considered as an approved accountant under the Inland Revenue Act number 24 of 2017. Now we don't know who is Mr. Pereira, we will look at. In the question it is asking, is he approved accountant? Now in the section 195, it's defined very clearly who is the approved accountant. Then Roman 2, he is required to sign the income tax return for year of assessment 18-19 under the Inland Revenue Act number 24 of 2017. Can you remember under section 126 subsection 4 and subsection 5, it has mentioned that person who prepare in the return for the rewards shall be assigned the return for its accuracy and the completeness. Then you have to argue with that, is that Mr. Pereira is eligible or a required person like that. Okay. Then for the 5 marks, these are the requirements. For 5 marks, these are the requirements. Then we will come to the analysis of the question. We will come to analysis of the question, which is non-resident and international taxation question discussion, December 2019. I have highlighted this, if not you are asking from me, it is under 2015 curriculum, but same law applicable for your examination still. But for your December examination, this way we cannot do because rates and everything has changed. Therefore, till this examination I can apply this. Then what's the part A? Determination of chargeability of income tax of a non-resident person. The PHP is a Singapore company. Then we need to look at that PHP shall pay tax in Sri Lanka for 8 marks. 8 marks mean how many minutes? It's 14.4 minimum. You can take 6 minutes more. It's a 15 if it is, so it's a 15 minutes, but try to complete in the 14.4 in the strict to time. Okay. Then part B, determination of chargeability of income tax of a non-resident person. For it has given selected transaction has given that supply of equipment. It is a selected transaction. For how many marks, Lamai? 7 marks. It's a 12.6 minutes. Then part C, compute income tax liability of non-resident person. It's a 5 marks, maximum 9 minutes for that computation part. Part D, taxation and ethics under contemporary issues in taxation. It's 5 marks and it's 9 minutes. Clear? Then we will analyze the question. You know the all requirements and how many marks, how many time. Then we will come to the question. It's not like now the current question. No, Lama, this is the facts are very short and not sweet, but it's a little bit in the summarized and the short version. But the time, with the improvement of the time of the paper and the students, then that kind of the, like March 2021 paper question, that kind of the question can be tested. Okay. Then come to the question 1. POH20 PTE Limited, which is PHP, is a company incorporated in Singapore. Now, Lamai, while reading the question, I will analyze the question. Then this is PHP Singapore. PHP, which is a Singapore. PHP I will take, it is incorporated in Singapore. That means if it is incorporated in Singapore, what is this? Non-resident company. Up to now we know that. Then is a company incorporated in Singapore. It has a 100% owned subsidiary in Sri Lanka named POH20 Lanka Private Limited. PHP Lanka. Now this company has its 100% owned subsidiary. 100% owned subsidiary company in Sri Lanka. What is that name? It is PHP Lanka. PHP Lanka. And what it has given? Company incorporated in Sri Lanka. Company incorporated in Sri Lanka. Then what is this company? This is resident company. This is resident company. I think the first part is clear. The POH2 group of companies is engaged in the business of constructing and commissioning water purifying plants. What's their main business activity? Now lamai, it's talking about this entire group, this PHP Lanka and the PHP Singapore entire group. What is their principal business activity? It's a business of, this is very critical, very important to know the principal in every question. It's very important to know the principal business activity, but here it's more and more important. What's their principal business activity? Which is business of constructing of, it's a constructing and commissioning of water purification plants. Water purification plants. This is their principal business activity. Now, the first paragraph analyze. Second, now there is another company, GEO Builders Limited, GBL, is a construction company in China. This is the first situation, and my second situation, there is a GBL. What is this GBL? This is a company incorporated in China. Incorporated in China. Then anyway, this is what non-resident company or non-resident person. Now, China that has won a project to construct a factory in Sri Lanka. Now what they are doing? They are doing a construction of factory in Sri Lanka. GBL has entered into 2 agreements with PHP and PHP Lanka. Now the relationship to PHP and PHP Lanka coming. Now the GBL, which is a non-resident person, they have entered into the agreement. Entered into agreement with whom? Entered into agreement. One party is the PHP Singapore. Other party is the PHP Lanka, which is a resident company. Is it private limited? I think it's a, yes, it's a PVT Ltd. What are those 2 agreements? To construct a water purification plant in the factory in Horona. The designing and supply of equipment was handled by PHP from Singapore. PHP from Singapore, what's they are doing? Designing and supply of equipment. Supply of equipment. Designing and supply of equipment was handled by PHP from Singapore. PHP Singapore. Its entire part is doing in a PHP Singapore. After that, the equipment was directly supplied and consigned to GBL, who cleared the goods from the port after paying the relevant taxes and levy. Here, this equipment directly from Singapore, it's directly coming to GBL and paying taxes by GBL, doing the clearing part. Clearing part is doing by GBL. Singapore person or non-resident person in Singapore only doing what, lamai? Only doing the supplying the equipment to Sri Lanka. But this designing part is not mentioned. Okay. Then all other work relating to the project was assigned to the PHP Lanka and performed in Sri Lanka. All other works for your easy reference I am taking other than designing and supply of equipment. All other work means other than designing and supply of equipment. Clear? Done. Then it's performed in Sri Lanka. Anyway, lamai, this is what? This is a resident company. Don't forget, this is a resident company. This is a non-resident company. Then, no employees of PHP visited Sri Lanka at any point. From Singapore, any employee has not visited to Sri Lanka. Any employee not visited to Sri Lanka. That means there is no any service fee on this contract still. Tamane, we will look at. Then after that, the designing work was performed in Singapore and the direct supply of equipment from Singapore were invoiced from Singapore by PHP, while the work performed locally by PHP Lanka was invoiced by PHP Lanka. Now see, the designing work performed in Singapore and the direct supply of equipment from Singapore were invoiced from Singapore. Design work has done. This is talking about designer. Design work has done in Singapore, but for the supply of equipment part, even the invoicing part has done in Singapore. That means contract has signed in Singapore. The amount, the value of the contract has decided in the Singapore, and it has the invoice in the Singapore. It is equipment from Singapore were invoiced from Singapore by PHP, while the work performed locally. The local part work performed locally by PHP Lanka was invoiced by PHP Lanka. Lamai, if this is invoiced to Singapore, is it invoicing in LKR? No, it is in foreign currency. Invoice in a foreign currency. Then the entire project was completed within 10 months during the year of assessment 18-19. Whatever after this entire project completed within 10 months period. 10 months period. These are the critical information given in the question. Then the contract value of the project was divided into two portions. One portion is in US dollar, convert into the offshore activities handled by PHP Singapore, and the other portion in LKR, convert into the onshore activities provided by PHP Lanka. Now you can clear here, all are in the LKR, the other part is in the foreign currency, which is the foreign currency US dollar. In the question it has given. Then given below is the detailed breakup of the value of the contract and the work that is performed onshore and offshore, and the price on each component of the contract per the agreement entered into GBL. Now my main thing, this is a one requirement, this is a one requirement. Then you cannot write a one answer for both of these two. Then the details given, designing part, foreign, it is done in Singapore, and it is 500,000 US dollar. Direct supply of equipment to GBL 2 million. Then local supply of the installation of equipment and testing, construction of water purification plant. These are this LKR value. Are you going to take this LKR value with reference to non-resident person? No, Lamai. Why? It is a resident company. The other than the equipment and designing part allocated to resident company. Then these LKR values are more or less, it's not relevant to us. Okay. Then next one, PHP has identified the cost of involving in the project as follows in US dollars, salary and the time cost, general overheads. Done. This is on the non-resident and international taxation, the available information. Now next para, Mr. Pereira is a chartered accountant. Now Lamai, you, by looking at this wording, Mr. Pereira is a chartered accountant. Under the definition of the approved accountant in section 195, to be an approved accountant, you should be whom? Be a chartered accountant. Now Lamai, question itself it has given. Then you can easily score that marks. Is a chartered accountant employed by PHP Lanka. He is responsible for the financial reporting and compliance obligations of the company. The management of the company has requested him to sign the income tax return for the year of assessment 18-19 as the return was prepared by him. Now the extract of the particular double taxation treaties it has given, and this is the question. Now analyze if PHP Singapore is required to pay income tax in Sri Lanka for the 8 marks. PHP Singapore shall pay tax in Sri Lanka on behalf of the activities performed in Sri Lanka. Yes, PHP shall pay tax. While am I? This is the group. In this group, PHP Singapore is there. Then it is there is a PHP Singapore and there is a PHP Lanka Private Limited. Here 100% owned subsidiary of PHP Singapore. What they are doing, business of constructing and commissioning of water purification plant. Any contract which came into PHP Singapore, if they are performing commissioning of water purification plants which came to them, if it is a Sri Lankan project, if it is another non-resident person doing on behalf of the Sri Lanka, in that sense all the activities of this PHP Singapore is performed by whom? Performed by PHP Lanka Private Limited. Therefore, due to the entire group is doing the same business, and due to PHP and the PHP Lanka being a subsidiaries, fully owned subsidiary company, then therefore any contract which come in on behalf of the PHP Singapore, all performed by whom? PHP Lanka. Therefore, if there is no PHP Lanka, can this PHP Singapore perform that activities in Sri Lanka? Cannot. Therefore, indirectly there is a relationship between the PHP Singapore and PHP Lanka as what Lamai seems to be a dependent agency relationship. Okay. Now for 8 marks we will come to the answer. It's analyze if PHP in Singapore is required to pay income tax in Sri Lanka. You have to take the Inland Revenue Act and the double taxation treaty. How it comes to the answer, Lamai? First this same manner. First you should recognize PHP Singapore is a non-resident person. Then you shall tell, okay, if it is a non-resident person under section 69 subsection 4, to this non-resident person, income arising in or derived from Sri Lanka under section 4 of the 4 subsection B of taxable income, it should be tax in Sri Lanka. The source of income. Then source of payment of a non-resident person defined in which section? Section 73. Accordingly, which source? That's the question. It's a business income. If you had to write, if the PHP Lanka Private Limited performed activities on behalf of PHP, then it is the that under the agency relationship, it is liable to pay tax in Sri Lanka. Clear? Then I think this analysis is helpful to you. Even in the examination, Lamai, please first analyze the question. Don't just read the question. It's like a non-resident taxation question. In the non-resident taxation question, it's a while you're reading and drafting the question, is really important for not for any other thing, for you to see where the answer in the question. Okay, we will come to the answer for the part 1 here. Part A, as per section 69 subsection 4, what is it? Determining of residential status of a company. Of the Inland Revenue Act number 24 of 2017, if a company incorporated or formed under laws of Sri Lanka, or it registered or the principal office situated in Sri Lanka, or any time or at any time during the year the management and control of the affairs of the company exercised in Sri Lanka, it is the considering as a resident company. Now it's a theoretical part. This is the theory part. We have taken it from the Act number 24 of 2017. Now we are taking the application. This is A for application. See, as per the information provided, PHP is a company incorporated in Singapore. Now I am telling what I know, what I taken from the question. Company incorporated in Singapore and thereby what? A non-resident person for taxation in Sri Lanka. And I have concluded it. I have concluded as the non-resident person. Next paragraph, now confirm non-resident. Then you have to tell if the non-resident person, how that person shall pay tax in Sri Lanka. Accordingly, as per section 4, assessable income of a non-resident person is equal to the person's income from employment, business, investment or any other source that for that year of assessment, what is telling, to the extent that the income arises in or derived from a source in Sri Lanka. Clear? Then therefore, as per section 73 of the Inland Revenue Act and the DTA between Sri Lanka and Singapore shall identify the source of income with reference to PHP Singapore. Now we have come to the next one, identified as a non-resident. In that we will knew, we have knew that, okay, the particular sources of income shall be taxed in Sri Lanka. Then we need to look at as per DTA between Sri Lanka and India, Sri Lanka and Singapore, what are the sources of income. Since there is a DTA applicable as per section 75 subsection 2, the provisions of the DTA will prevail. Now in the act it has given as per section 75 subsection 2, the provisions of the DTA shall prevail. Therefore, we need to apply the DTA. Now up to that we have applied the Inland Revenue Act. Come to the provisions of the DTA. Since I have done 100% of the Singapore and Sri Lanka treaty, Lamai, I am not again coming to treaty and explain this, since I have done this what's the 100% which I have given, I have done it. Therefore, we will come to the answer. Accordingly, as per Article 5, permanent establishment, there is no fixed base in Sri Lanka. You can see Lamai there on behalf of PHP Singapore, there is no any fixed base. That's mean a branch office, construction site, a place of management, anything, there is nothing. There is no fixed base in Sri Lanka with reference to PHP Singapore. As well as PHP Singapore has not created PE through building site, construction, assembly or installation project, a drilling rig or ship. I have taken the particular definitions in the PE, Article 5. To building site, construction, assembly or the installation project, a drilling rig or ship used for exploration or development of natural resources, including supervisory activities in connection therewith. But only if such site, project or activities last for a period of more than 183 days within 12 months period as per the para 3 subpara A of the Article 5. For 183 days, this situation is not mentioned in the question. Then, and also PHP Singapore has not created a service PE by the furnishing of services, including consultancy services, by an enterprise of the contracting estate through employees or other personnel engaged by the enterprise for such purpose, but only if activities of that nature continue for the same or connected project within other contracting estate for a period or periods aggregating how many days Lamai? More than 183 days within 12 months period, again as per the paragraph 3 subpara B of the Article 5. Now up to now there is nothing, but we need to look at further. However, as per para 7, what is the para 7 in the same article? Para 7 is talking about the dependent and the independent agent. We will come to that. However, as per para 7 of the same article, if it has mentioned that an enterprise of the contracting estate shall not deem to have a permanent establishment in the other contracting estate merely because it carries on business in that other estate through a broker, general commission agent or any other agent in an independent status. You all know that. Having an independent agent, it does not come in as the business profit of that particular non-resident person, provided there is a proviso, provided that such person are acting in the ordinary course of their business. However, when the activities of such an agent are devoted wholly or almost wholly, devoted wholly or almost wholly for on behalf of that enterprise, and conditions are made of imposed between that enterprise and the agent in their commercial and financial relations, which differ from those which would have been made between independent enterprise, he will not be considered as an agent of an independent status within the meaning of this paragraph. If he is acting on behalf of or devoted, see the wording in the treaty, devoted wholly or almost wholly on behalf of that their commercial and financial relation. If so, it is that person is not acting as the independent agent. Thereby, as per the information provided, the PHP Lanka Private Limited EC. Now this is a theory, again this according to double taxation theory, double taxation treaty. This is theory. I have directly taken that paragraph 7. Directly taken that paragraph 7. Now I am applying this to given scenario. This is the application. This is the application. What is the application it has given, lamai? Thereby, as per the information provided by PHP Lanka Private Limited is a wholly owned subsidiary of PHP Singapore and is engaged in providing of services in relation to projects undertaken by PHP Singapore. That's why it's very clearly given. Entire business is doing constructing and commissioning of the water purification plants. Then any project which come to Sri Lanka, it's totally doing by PHP Lanka on behalf of whom, lamai? On behalf of PHP Singapore. As such, where activities of PHP Lanka are devoted wholly or almost wholly on behalf of the PHP Singapore, then Sri Lankan entity would considered as dependent agent on behalf of that Singapore company. Clear? Therefore, POH2 PT, which is Singapore, is deemed to have a PE in Sri Lanka. PE එකක් තියෙනවා හා සමානව සලකනවා by way of the dependent agent. As PHP, the PTE Singapore is deemed to create PE in Sri Lanka, it will be liable to pay income tax in Sri Lanka based on Article 7 of the DTA between Sri Lanka and the Singapore, which is on what income, lamai? Profits that are attributable to PE in Sri Lanka. I think it's 100% clear, taken into this much effort and everything in the how to, the answer should be aligned. First part had explained for 8 marks, it has done. Now we will come to the second question. Since my requirements are there, I am directly coming to my Word document. Part B, it is asking, analyze PHP in Singapore is required to pay income tax in Sri Lanka for the income it earns from the supply and delivery of equipment. Now, my first part completed. This is the second part. What is the question is asking? For supply of equipment, whether this PHP Singapore shall have to pay income tax in Sri Lanka. Let me analyze again. The supply of equipment, who is doing? It's doing by the PHP Singapore, where from the PHP Singapore itself they are delivering this equipment to Sri Lanka. That's the only part they are doing. And the contract has entered in between whom? In between GBL and the PHP Singapore. That two foreign countries, this is China, this is Singapore. Then original contract has entered in outside Sri Lanka and come to the invoicing part. Invoicing part done in the Singapore and invoicing part done in which currency, lamai? Foreign currency. And come to here, after this equipment came into Sri Lanka, who is going to, who is the consignee? The name of the consignee is directly GBL. The PHP Singapore is sending that the equipment under the name of the GBL. And the person in the GBL paying taxes, clearing that and transporting that equipment to the factory at Horana. Everything is doing by GBL in Sri Lanka. No any relationship between the PHP Singapore. If so, lamai, that supply of equipment part, is it liable to pay tax in Sri Lanka? No, it is not liable to pay tax in Sri Lanka. How are you confirm your answer? Write these points. These are answer points. Nothing other than that. Analyze this way in the question and write these answer points one by one. Due to these reasons, the PHP Singapore is not earning any income in Sri Lanka on this supply of equipment. But my designing part, the information, not much information has given, but it has given designing is done in Sri Lanka, but it has given particular expenditure. The staff salary, can you remember in the paper? See in that para, see salary and time cost, general overheads. දැන් අපි මේකට කිසිම වියදමක් දරන්නේ නැත්තම් equipment part in Sri Lanka, if there is no any expenditure, then ළමයි indirectly you have to think these two expenditure which incurred in US dollars for what? Designing part. Little bit you have to logical and you have to think in the non-resident taxation question. These are not easy questions. The particular answer points are hidden in the question. You have to take these things while reading the question carefully. Okay? Then we will come to the answer. According to that explanation, lamai, for equipment part, PHP Singapore does not has any liability to pay income tax in Sri Lanka. Come to the answer. This is part B, which is analysis of income tax, chargeability of PHP Singapore on income earned from C. It's asking for particular transaction for this equipment supply. That part also completed. Then supply and delivery of equipment. Supply and delivery of equipment. As per Article 7, business profit of the DTA provides the business profit article. It provides the profit of an enterprise of the contracting estate shall be taxable only in that estate unless the enterprise carrying on the business in that other contracting estate through a PE situated therein. If the enterprise carrying on business as aforesaid, the profit of the enterprise may be taxed in that other estate. What's the wording? But only on the portion that is attributable to the permanent establishment. When writing your answer, if it's this time also, if it is tested like this, these are key points should included in your answer. According to Article 7, subsection 1 of the DTA, PHP Singapore is only liable to pay income tax in Sri Lanka on the profit that are attributable to PE in Sri Lanka. This is A for what? Application part. Then, as the supply and the delivery of materials is directly done by Singapore, profit from such activities are not attributable to the PE in Sri Lanka. As such, the income profit from such activities will not be subject to income tax in Sri Lanka. This is your conclusion. And now analyzing the case with the scenario. In the case of the Anglo-Persian Oil Company, why we have taken the case law here? Because the question itself it is given, you should apply what? Case law provision. Now we have applied. Anglo-Persian Oil Company versus CIR. The appellant company was incorporated in England and carried on business there. It provided the salt fuel oil. It entered into contracts in London. In our question, entered into the contract in Singapore with ship owners. Then whose ships call at various ports, including Colombo. In Colombo, the appellant company had no place of business but stored its fuel oil with its agent, the Ceylon company, which trades in fuel oil. The payment is to be made in London. In our case, payment to be made in Singapore, invoice in Singapore. The Ceylon company stores the appellant's oil and its own oil in tanks built on the premises used by the Ceylon company for its own business, and it was held in this case that the property in the goods passed to the shipping company at the time of contract was signed. The same thing here, the ownership of the equipment has transferred to GBL at the point of the agreement signed in Singapore. Then the Ceylon company was merely an agent for the delivery of the oil. In this case, even there is no such agent. The act of delivery of the oil in Ceylon does not mean being the profit under the classification of profit arising in or derived from Ceylon. If the agent in Ceylon did not actually affect the contract, or if he was not instrumental in effecting it, the non-resident would not be liable for the profit arising in such transaction to pay tax in Sri Lanka. Based on the above case, the transactions on delivery of materials by the Singapore company were entered in Singapore. Further, local entity was not instrumental in affecting the transaction. As such, the profit of this transaction will not be liable to pay tax in Sri Lanka. Am I clear? I think it's clear, Lamai. For this end, you have to write your answer. Then part C, I think it's very quickly and a very small question. Compute the income tax payable by PHP on its income gain in Sri Lanka, including remittance tax. Then we will come to the, I need to come to the facts of the question little bit again. What are the income earned in Sri Lanka? This design in part, the US dollar 500,000, it is liable. Can they or shall they pay tax on this direct supply of equipment to a GBL? No, Lamai. They are not liable to pay tax on this. Why? Because it is, we have concluded as on behalf of this supply, the PHP Singapore is who? Independent agent. And the US dollar values are given, the particular expenses are given. The 1 US dollar equal to LKR 175. Then we will come to the answer. This is the answer. This is December 2019 question 1 part C, PHP Singapore, TIN, it's 9 digits. Then computation of income tax liability of this non-resident person for the year of assessment 2021 on behalf of what? Only on the design in part, Lamai. Then design in income US dollar 500,000 into LKR 175. Then the 87,000 we will take here as the rupees. It is 87,500 less project related expenses. In the question itself, it has given salaries and time cost, salaries or time cost, and the general overheads 23,000. Then these are in the US dollar. We have to multiply those from the 175. Then salaries and general overhead US dollar the 345,000 plus US dollar 23,000 at 175. Then this is the LKR value. Then total assessable income is the revenue minus this. You cannot, that's why Lamai, don't, in the non-resident taxation questions, don't think that much about that standard format, the starting from the PBT and allowing and disallowing. Don't think about that standard format. Wherever information given, you have to start from that. Then total assessable income and taxable income, and for this 28% is your tax rate. You have to apply the tax rate. Now I am going to remittance tax calculation, or else you can do it in the same place in the taxable income, but I have taken it separately. Here for computation of remittance tax, accounting profit before tax, we have computed in here, which is 23,100,000. We have to take it here. Then current tax expense, it is 6,468,000. For this apply 28% tax rate. Then profit after tax remaining to remit to Singapore is this. For this amount we have to take, this amount is with remittance tax, we have to take it separately, then it should be divided by 114 into 14. Therefore, what is the amount of remittance tax? At the 14% as per section 62 and the first schedule para 9 is 2,042,526. Then this is my answer. This is total tax liability. We don't have any tax credit lamai, then balance tax payable or refund due also the same amount. Is it? I think it is clear. Then everything explained to you. Now we will come to the last part of the question. I will take my Word document since I have explained this part. The 5 marks it's asking, is that Mr. Pereira chartered accountant is a approved accountant? My answer is yes. Why I am telling yes? As per section 195, under the approved accountant definition, he is what? He is the approved accountant. Why being a chartered accountant? We will come to that part first. Part D. In Roman 1, as per section 195 of the Inland Revenue Act, an approved accountant is an accountant who is the member of the Chartered Accountants of Sri Lanka. As Mr. Pereira is a chartered accountant, he will be considered as an approved accountant under above definition. How easy this question? Now, the part B. The part B is asking that the Mr. Pereira is required to sign the return on 1819 under the Inland Revenue Act. If he has prepared the account for the rewards on the completeness and the accuracy, he has to sign the return. But lamai Mr. Pereira is whom? Mr. Pereira is a full-time employee. Then it's a provision it has given. He is the full time. If it is if that person is the full-time employee, then his no need to sign the income tax return. But again, under section 126 subsection 4, it has mentioned that if the company has authorized that person to sign the return, then that person has to sign. Then if the company has authorized as the authorized agent or authorized representative as under the name of the authorized representative, that Mr. Pereira, then he shall file. That's your, he shall sign, that's your answer. Come to here. Section 126 tax return, which is section 126 subsection 5 of the Inland Revenue Act, is specified that where a return or part of a return was prepared for a reward by some other person, including by an approved accountant other than a full-time employee of the taxpayer, that other person shall be signed the return. Here, other than a full-time employee of the taxpayer. Now, as per information provided lamai, Mr. Pereira is a full-time employee. In that point, you need not to sign the return. That means Mr. Pereira shall not be signed the return. As per Mr. Pereira is an employee of PHP Lanka Private Limited, he is not required to sign the return, even though he has prepared the return as per the above provision. But there is another provision. However, section 126 subsection 4 is specified that the taxpayer's duly authorized agent shall sign the return. The definition of authorized representative in section 195 includes the member of Chartered Accountants in Sri Lanka. Therefore, I am again using my word if. අපි දන්නේ නැහැ මෙයාව appoint කළාද කියලා. We don't know that. Therefore, if PHP Lanka Private Limited has duly appointed Mr. Pereira as its authorized agent, then he will be required to sign the return. You have to assume and you have to write a good answer. Is that clear? Then this is the end of the discussion of the December 2019 question 1. As I have promised, this is the revision session outline. In that lamai, I promise that you to complete the non-resident taxation, these 4 questions, non-resident and international taxation, revision kit question 1, 2 and 3. And even it's the before the 2020 curriculum, I thought it's good to take this question, which is the perspectives are different, which is December 2019 question 1. Okay. Then with this, I am winding up the entire part of the discussion of theory and the revision of the non-resident taxation and international taxation. Then after that, I will move to the rest of the question discussion and the revision session for 2021. Thank you very much.